Hey everyone, me Kevin here. Welcome back to another version of me Kevin videos. Today we're going to be talking a little bit here about cryptocurrencies, why I believe crypto is currently having a little bit of a sell-off, and what this means for cryptocurrencies a long run. Let's get right into it. So first things first, let's go ahead and start by just looking at some price action here, and then we'll get into some of the theories that I have regarding the sell-off that we're seeing at the moment. We are seeing a crypto sell-off at the moment. It really started with Bitcoin. I'm going to go back to the day chart here on Webull with Bitcoin. It's been very, very volatile here, unusually volatile over the last about 2 months. We really have eradicated all gains over the last 2 months here. We've obviously hit some incredible highs with the Coinbase euphoria, but we are at levels right now that we were sitting at the middle of February, which was kind of right at the beginning of the tech sell-off. Now, crypto has been something that has been performing so amazingly over the last 6 months. It has really ridden through the tech sell-off without any kind of adjustment to the downside. We're only now starting to see some of this adjustment to the downside and potentially getting ready to break a support level around that 47,000 level here. And we'll see if we get a full candlestick under 47 or not. We'll keep an eye on Bitcoin. But even though Bitcoin has been having a lot of heart palpitations, something that has been doing very well recently has been Ethereum. It's obviously up from its 2,300 support-ish level. I say ish because Ethereum has had such a crazy run really over the past couple months. I mean, just look at this run here just from April alone. I mean, really, you could look at Ethereum in the last 30 days and go, come on, this is nothing, right? I mean, Ethereum has essentially doubled in the last 30 days. It's been absolutely incredible. But we are also starting to see that trend to the downside, and it makes us wonder, okay, how long is this trend going to continue? We do have Doge vacillating here around 50 cents, holding up decently. Obviously, a big sell-off after SNL. We got the pump after Elon Musk started talking about investigating Doge as maybe an option for Tesla to accept payments in, working with developers to make Doge more efficient. However, some additional tweets have come out, and it's worth bringing those up. And then after we look at a couple tweets here from Cuban and Elon, what I really want to do is share my theory on potentially what's happening here, why we're seeing a little bit of a crypto sell. It's not something that I believe is epically long term, but the pain could continue for a period of time, and so we'll get right into that. But let's first just catch up on some of the latest things that we've gotten from Elon Musk. So we're going to go ahead and scroll back a little bit to yesterday, and let's see here. All right, let's go ahead and grab it up here. All right, so these are some of the latest tweets from Elon. So let's go ahead and look at the latest here. Okay, so here we've got Elon reacting with a laughing emoji here. The people currency. Here's a thread on why Doge, or Elon choosing Doge because Dogecoin is better than Bitcoin in many fundamental ways, like faster transaction speeds, lower fees, and lower environmental impacts than Bitcoin. Doge is more affordable to the regular folks. I think a lot of crypto folks take issue with comments like this because really, you can buy it with fractions. It doesn't really matter. Let's see, 100. We got many blocks every 6 seconds with fees so low that anyone can spam attack networks with very little spent on fees. Okay, Elon Musk replies, for those bad at math, 100x higher transaction volume with 100x lower fees means that total fees earned stays the same. Low fees and high volume are needed to become currency of Earth. Now, this is actually kind of a big comment here, this second part. So getting out of kind of the trap of going back and forth about the math, the commentary from Elon over the past few days has been extremely bullish on cryptocurrency being something that's here to stay. Even after his critique of Bitcoin, he came out and corrected his critique and suggested, hey, I'm not suggesting that, cryptocurrency is not the future. So this is something that has folks very excited that Elon's really looking at cryptocurrency as something that could solve issues in the world. And this is something that Elon does with cars, transportation, space, and energy. Well, we have some more coming from Elon here, so let's go ahead and find it. Let's see here. Okay, testing, some laughing emojis. Right, talking about our space. Somewhere, and I don't know if he deleted it, but somewhere, Elon Musk yesterday suggested potentially creating his own cryptocurrency. Now, I'm having trouble finding that tweet right now, and personally, I wonder if it has been deleted. But Elon suggested that yesterday in a tweet. And that is something that is very Elon-like as well, is if he can, to create his own cryptocurrency. And I wouldn't be surprised, I should say, to see Elon considering that heavily. Now, I'm not going to spend a lot of time on my thoughts on Elon Musk doing this, but just as an initial thought, Elon Musk developing his own cryptocurrency, obviously there would probably be just as much hype and euphoria around that currency as there would be around SpaceX getting in on the IPO, getting in on Tesla stock. There would be a lot of euphoria around that, certainly more than I could say we could imagine for other altcoins that have come on the scene. I won't mention any names. I don't want to bag on any. But something about Elon Musk that we do know is when he looks at something like Dogecoin, or he looks at something that's existing, usually his solution has been to create his own version of something. There have been rumors of so many partnerships with Teslas, and there have been so many partnerships with Tesla as a company or Elon Musk. And one of the favorites that comes to my mind is Elon Musk and Tesla's partnership with a Mobileye for their self-driving suite. And this was something that they had through 2016. So really, I want to say about 2012 to 2016. And Elon Musk and Tesla took the approach of, wait, why use another when we can create our own? I would not be shocked to see Elon come up with his own currency because of this trend of let's just do it ourselves. Let's do why are we sending rockets to space and then destroying the rockets when we could just land the rockets and reuse them? It would not shock me at all to see a crypto come from Elon. And this is something to pay attention to, but it doesn't really tell us much about the sell-off here now. It just is worth mentioning that there is so much of an undercurrent of cryptocurrency is coming. And that really, in part of this video here, is me wanting to reiterate that I see cryptocurrency is here to stay as well. Long term, I don't believe any of this silly sell-off that we have right now is a long-term issue. But we do have a lot of red right now. And let's go ahead and talk a little bit about my theory on why we have this red right now. The currency of our Earth, exactly. So let's touch a little bit on why I think we have the red that we are seeing right now. So first of all, here's CoinMarketCap. One thing that I do also want to point out before we hit my theory is that Cardano is still holding on incredibly to its run of having broken $2. When we look at the day chart here, Cardano has really exploded since Elon Musk's comments on the 13th about looking for a more energy efficient style of cryptocurrency. And Cardano has really, really run on this news. You can see this is how we broke through $2. Now we're sitting at $2.20. It seems like every day I cover this, and I'm not trying to take any kind of credit, but it continues to run here. And we're really seeing it run in these sort of individual spikes of volume. Rather than sort of volume overall growing, it just seems like we're getting these little spikes that really push Cardano to new levels. And then when volume falls, what's crazy about Cardano is we hold that value when volume falls. And it's really only when volume comes back and in these spike patterns at Cardano that we're seeing Cardano sort of pump up. I know there are also, so we've talked about Ethereum, Bitcoin, and Doge, all really pulling back here. Because so many of us mention it, I will take a peek at the Doge killer, as we like to say, Shiba Inu here. Grab this one. We're seeing, let's go a little bit closer in here. Let's go to the hour here. Seeing a little bit, well, a good chunk of a sell-off here as well, just from its highs a few days ago, right? We've had this incredible launch here, and has sort of been consolidating to the downside. All right, so what is a possible explanation for all of this? And to take a peek at this, I want to also take a peek at this right here. And this is not my theory. This is just from CNBC. Why Elon Musk's Bitcoin thinking is wrong for most corporations, CNBC article. I'm just going to jump right into this paragraph here. Data from a recent CNBC survey shows that more company finance chiefs are taking Bitcoin seriously. A survey of CNBC Global CFO Council conducted in March found a big increase in CFOs who said Bitcoin is for real. The percentage doubled, over 50%, since the last time CNBC asked CFOs the question in 2017. Among US-based CFOs, specifically, the percentage saying Bitcoin is for real doubled as well, 33 to 65%. Most CFOs of around the world, 80%, also believe, here we go, that Bitcoin is in a bubble and should not be accepted as a source of payment or held on the balance sheet. All right, so this starts introducing a little bit of a concern that I have. And I do not echo the belief that cryptocurrencies are in a bubble, but we do know that institutions are heavily invested in cryptocurrency. And one thing that we know about institutions is generally institutions are not all in on one type of content. Institutions generally diversify the type of investments they have for, well, of course, if they want cash and equivalents on their balance sheet, they're trying to create some growth, but also having diversified, balanced growth. So that way they're not taking on too much risk. Most companies, actually, I probably would say every other company that exists is not taking on a Michael Saylor style all-in mentality when it comes to Bitcoin and cryptocurrency, which has done amazing things for MicroStrategy and Michael Saylor. But regarding Bitcoin itself, and knowing that institutions have massively adopted their movement into cryptocurrencies, we could specifically to see that look at the Coinbase. If you have not done this yet, it's worth doing. Here, well, you know what? We'll pull it up together really quick. It's worth looking at this. I want you to see this. Coinbase Investor Relations. Let's pull this up, and then we're going to get to my theory. So we're going to pull this up here. Watch this. What we're looking for is we could probably actually get no. We really want their S1. So let's go to SEC filings, and what we're looking for is one of their first filings right before they went public, and it's large. It's like 700 pages, but we'll be able to find it pretty quickly. Really what we're going to see in it, whenever I can find the darn thing. Well, no, there's the amended. There it is. Here we go. There we go. Golly, there are lots of filings. Okay, I'm looking for a specific page that shows us the institutional adoption of cryptocurrencies. What I'm going to do, just to save you from all this like flashing around here really quick, is I'm just going to download this PDF really quick and find it myself. And I want you to see the transition in this institutional adoption of cryptocurrency in the eyes of Coinbase, which is really important because Coinbase is obviously transacting a lot and working a lot with institutions. And then we'll hit the theory. So there's this beautiful chart that shows the growth of cryptocurrency adoption amongst institutions, found it, but also as a part of trading volume. And this is going to play into my theory here. So take a look at this. I found the page. It's on page 98 of their S1. So if you care, it's on page 98. All right. Here we go. Now I lost it again. There we go. 96, 97, 98. There we go. Okay, so take a look at this. Back when we had our cycle in 2017-18, take a look at the light blue color here. The light blue color was your retail trading volume for cryptocurrency. 45 billion in crypto trading volume versus 11 billion. And you see that this retail lead maintained throughout 2018. But we had a transition in 2019. In 2019, we transitioned to more institutional volume, but very close to retail volume. Look at this, Q2 2019, 17 verse 14, 16 verse 11, 9 verse 5, 18 verse 12. And the institutions have really taken over trading volume to the point where we could look at Q4 2020 over here. And in Q4 2020, we almost had twice the trading volume of institutions versus the retail. It's a complete flip-flop of what we used to have. And we know that institutions are very different from us as retail investors, in that most institutions do whatever they can to diversify their risk, to have exposure to crypto, but to hedge their exposure to crypto. And I would not be shocked, and this is where we get into my theory, to see what's happening in the tech space, in consumer discretionaries and tech in terms of stocks, looking at, for example, Tesla, Square, or some of the other sell-off that we've been seeing. I would not be shocked to see the recent sell-off that we've seen in the Teslas, again, the Square, the other tech companies, somewhat start occurring in the crypto space as hedge funds and institutions begin to potentially short their cryptocurrency positions and begin to prepare for maybe a rotation into tech and consumer discretionaries, which have sold off so much, and try to rebalance and re-diversify. And to me, this could lead to this short-term pain in the crypto market continuing for potentially the next 2 or 3 months as we continue to have this massive overarching fear, uncertainty, and doubt into what the future of the next couple years is going to look like. Are we going to see a $4 trillion infrastructure package that ends up creating more risk for inflation, or is there going to be a smaller package? Are we going to have inflation, or are we not going to have inflation? What's actually going to happen over this next period of uncertainty? It would not surprise me to see the same shorting and intense volatility that we've seen in the tech space transition over to the cryptocurrency space. And the biggest targets of those, I think, aren't going to be the altcoins. I think they're going to be the ones that the institutions are most likely to be holding right now. And those are going to be the Ethereums and the Bitcoins. Now, personally, and again, I want to make this very clear. I think that's a wonderful opportunity. If you are a long hodler, or hodler, as many say, I think that's like a 50-50 there. I think there might be opportunities to get in basically on the dip of Bitcoin and Ethereum. I don't believe I'm at that level yet where I could say Ethereum's for sure at a support. Let's go to CoinMarketCap. It's going to be a little bit easier. Let's take a look at some of the technicals here for maybe Ethereum and Bitcoin. But I do think that this institutional push or this fall we're seeing is almost completely institutional driven. I think us as retail investors, we're hodling, we're buying the dip. But I think institutions are doing this as really a way to hedge what happened in the tech market, potentially happening here in the crypto market. So the issue with Ethereum, I believe is one to really pay attention to. But Ethereum, I don't know where we have support yet for Ethereum. And I think finding that support and seeing whether or not that holds is going to be critical for Ethereum. And there could be some larger opportunities in Ethereum here. See, if we just look on the day chart here, it's a little hard to zoom in on this. Okay, we'll just do it this way. If we zoom in over here, maybe we have a support level around this 35 level. But how long have we sat there? For a couple days? Ethereum is the one I'm potentially a little bit more concerned about in the short term. In the long run, I love the Ethereum future. I love the network effects we can get out of Ethereum, the coins that can be built on top of Ethereum, smart contracts, you name it. But really, if we break past 3,500, we don't have support until we start getting to 2,500 and around 2,000. So this is a potential setup for either discovering a new support level here somewhere, which would be wonderful. Or the potential for a violent dip on Ethereum. I don't know how long it would last because I think by the dipping it will be crazy here. But Ethereum is one that I'm paying attention to like every 30 minutes. I'm like, okay, where's my entry point, right? So Ethereum is one that I'm really excited about tracking, and so I want to put this out there. Again, the theory is institutionals protecting themselves, especially with the massive movement we've seen in institutional trading volume. Institutions protecting themselves from volatility by potentially hedging, driving, and shorting. Hedging, essentially, in this case, would be shorting, given the run-ups we've seen in the last month in Ethereum and the last 6 months we've seen in Bitcoin. Shorting these cryptos, leading potentially to no more buy pressure and more sell pressure. That potentially hurting these currencies in the short term, creating a dip opportunity. How low we go is the big question. Let's go ahead and look at Bitcoin. So Ethereum, I think, has really more risk. Bitcoin, we have a much steadier growth. We don't have this explosive 1 month growth over here, but we've also had some pretty incredible growth. Don't get me wrong. So take a look at this. Ethereum, this is about Ethereum's second time bouncing around this 46, 47 level. We had this bounce in February. I think it's going to be very important for Bitcoin to hold here. I think this is actually a critical point for Bitcoin to hold. Because if Bitcoin breaks with larger candlesticks, this 45 to 46 level here, it's also possible that our prior resistance becomes a new support around 40, or we fall to a newer support level in that low 30s again. I think this is a very strong support level that we have here. We sat at 32 for a very long period of time. When I say very long period of time, in the world of cryptocurrency, like a week is actually a long time. Because if you take a look at the other dips that we've had, we hit these supports and we bounce really quickly with Bitcoin. And that's why I do have a concern that if we do break past the support level here around that 46, 47, hopefully we don't. Hopefully we just keep getting this, madness or whatever here. But if we do break past this, the next support is either 40, which was a prior resistance, 40,500, or going back to around that 32 level. And so me personally, I've got some cash on the sidelines. It's basically a little bit of margin that I'd be willing to use at this point because I kind of blew all my cash last week on buying stocks. But I'm satisfied with my buys that I did last week in the tech sector. But I'm looking for a buy opportunity on these cryptos. Now, I don't want them to fall. Don't get me wrong. But if they do fall, I'm ready to dive in more heavily. The largest position I have right now is in Bitcoin, so obviously it'd be painful to see it fall. But these are some of the technicals I'm looking at and trying to make sense of what we've seen in the last 6 months with this tech and consumer discretionary sell-off. It wouldn't surprise me. Remember, we had the SPAC wreck. We had the tech and the consumer discretionary sell-off. We did have recovery hold strong after the rally that we had coming out of November, December. But if we do get that kind of sell-down pressure, I'm going to be ready to buy at those support levels, and I'm going to be looking for those. Again, just a theory that I have, especially regarding this institutional trading volume that we've seen. And institutionals, folks, if we go to, again, page 98, and explore this yourself. Coinbase gave us some incredible data here. And this is only based off Q4. Personally, I think this trend has accelerated. Not sure, but it wouldn't shock me to see that this trend has accelerated. So I'd pay attention to this substantially, especially since we know this is trading volume. And I do think a lot of us in the retail space are much more interested in hodling than I mean, that's maybe not necessarily true. I think there are a lot of us who do trade, but I think institutions, they certainly are the ones that have access to the tools that we don't, whether it's shorting, options, derivatives, which options are a type of derivative. So I think that could lead to some extreme volatility here the next few months. And when I say extreme volatility, let me clarify that, because I think the word volatility gets thrown around and it's just like, oh yeah, okay, it's going to be like this. It's going to be up and down, up and down. No, I'm concerned about us potentially seeing volatility to the downside, to some of these support levels that we've seen either in Ethereum, Bitcoin, and then maybe by the dip recovery. But when we hit that, I don't know. So those are just looking at some of the technicals, thinking out loud, some of my thoughts. Also, I explained why I think we might see this. And it certainly doesn't help that when we looked at the Bloomberg terminal, one of the articles that they're featuring is an article by CNBC suggesting that 80% of the CFOs around the world think that Bitcoin is in a bubble. Also sort of reiterating that if we do see a move into sort of by the dipping, institutions could potentially be one of those drivers where we get more companies moving in. Anyway, folks, if you'd like my perspective, consider checking out the amazing programs I have on building your wealth, linked down below. There is a coupon code that's expiring very soon. You get 39% off the programs on building your wealth with real estate investing, stocks and psychology of money, property management, sales, making YouTube videos, you name it. Consider making the investment, link down below. Thank you so much for being here, and folks, we'll see you in the next one.